Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert. The Dividend Diplomats. In today's video, we're going to cover 3 stocks that I own. And Lanny, all of these stocks are down year to date. And you know what? The more these stocks fall, the more I'm liking them and the more likely I am to add to my position.
Guys, hit that subscribe button. Give us a nice thumbs up here. Bert's looking and he's liking here. We got a bunch of dividend stocks here. One soon to be hopefully a dividend growth stock. Bert's been adding heavy to this massive company, guys, and it broke below a certain threshold. And I can only know Bert's hair is standing up. Bert's beard is falling off his face. He's like, Jinkies, I got to buy more.
That's right. So why are we looking at these stocks?
Buy the dip. Buy the dip.
In 2025, Lanny and I are talking more about slimming down our portfolios, building up our positions, rather than have a bunch of small positions that we have to manage, small positions that we have to monitor. Grow what you have. Buy the stocks you like when they hit the metrics. Buy them, build up those positions, set it and forget it later. And that's what's happening with 3 of these companies. Each one of these companies have had tough 2025s. Each of them are down. One is down now over 10% in 2025, and the other 2 are at least about 8% down. So we're going to run them through our screen. We're going to talk about some of the news that's happening with them and just have a discussion of what price point would I buy? What price point am I buying at right now?
I like it here. And I know I own 2 out of the 3, but unfortunately do not own one of these bigs, guys. But as dividend investors, we love dips because you can buy more dividend income for less, especially if they're high quality companies. Well, maybe not high integrity for a certain stock, but they've all shown track records that they can easily pay and cover dividends. And 2 of the 3 easily show year after year that they grow dividends.
That's right. And we're recording this on February 27th, Thursday night. Lenny and I have also been watching too. This night is where Bitcoin is in its Bitcoin's in a little bit of a free fall right now. I know it's not dividend stock related. Bitcoin is dropped all the way from well above 100,000 at its peaks. Now it's hovering right around 80,000. So Lenny and I keep looking just to see, will Bitcoin break below 80,000? Right now, at the time of this, it's at 80,200. It keeps hanging around 80,000. It's not there. So if it crosses it in the middle of the
video, it dipped below for like a hot second, 79.9 or something like that.
All right, so we're going to keep watching. It'll be something, if it happens, we're definitely going to talk about, because getting below 80,000 is a pretty freaking thing. But let's talk dividend stocks.
Let's talk, Bert. So the first stock obviously is in the defensive industry. You know, Bert, you own a lot of shares of this stock.
Yeah, 8, I think. 8 is big when it's $450 per share. So it's not a small position, but of course, 8's not the largest position. So I would love to add more, at least get to 10, 15, 20 of this company. We are talking Lockheed Martin, ticker symbol LMT. And the defense sector continues to be on our mind, so much so that our last video on Thursday, follow that link here above, we talked about General Dynamics and we talked about some of the factors that are hitting the defense sector. That's why I'm looking ahead at Lockheed Martin, Lanny. That's why Lockheed's coming back to the table. Cuts for defense spending. Stocks down 8% over the last year.
I love cuts in defense spending when I'm looking to buy Lockheed.
Yeah, that's absolutely right. But you know what? Even if they cut it, the budget, they said it's about 8% shift in defense spending. So they're looking to cut 8% out of a budget. And we're not talking a small $100 budget here. We're not talking a $200 budget, $300. They're not talking about paper clips they're buying. This is an $876 billion budget. They're just looking to trim down 8%. So there's a lot of meat. There's a lot of fat. And there's a lot of money to still be handed out to Lockheed Martin.
I'm going to save you a lot of money.
Yeah.
No, there is. And, 8% on 900 billion, again, is less than 90 billion. So you're still well over 800 billion in defense spend. So you have to feel okay that Lockheed's going to still get their fair share here.
Yeah. And also, too, the fair share might not just come from the United States. I think that's going to be a key point, especially if one of the, we're not here to talk political, but if one of the things the U.S. is going to step back from defending other countries on a world stage, which is where things want to go right now, other countries are going to have to spend on defense sector money too. So who are they going to call? They're going to call Lockheed. They're going to call
Ghostbuster.
General Dynamics. Yeah. So the money might come into Lockheed Martin from other countries outside the United States, which might more than cover that 8% pullback that we're going to see in the US defense spending. So there's another avenue for them to grow that revenue in the current year.
Yeah, I agree. I agree. And guys, we're going to run them through the metrics. Remember, we're going to run them through the dividend diplomat stock metrics here, guys. Again, we're filming this February 27th, and I have to apologize to you because I've got this nasty lingering cough. So,
yeah, I was sick all of January. Lanny feels like he's been sick all of February. So,
oh yeah, it's the freaking truth, man.
yeah.
This stock is down 8% to 446.46. So they are below $450 a share.
Yeah, that gives you a PE ratio. I could help you out there while you get through that cough, lady. That gives you a price to earnings ratio of 16.40x. And you know what's interesting? Their 5-year average price to earnings ratio, Lanny, is 16.21x. So they are now
check 79.5.
What? All right. It dipped below 80,000. Woo-wee, baby. Let's go. There it is. Yeah, it is. Oh, it's hovering. It just jumped up, but yeah, it is officially below that was for a hot second. Tried to grab a screenshot of it that we'll put up here on the video, but it popped up above 80,000. But you can see a little chart dip down there below, so you'll see what's up there. Okay, so Lockheed Martin is right in line with its 5-year average price to earnings ratio. That annual dividend is 13.2. That gives you a dividend payout ratio of 49%. So right in the sweet spot. Perfect.
Great spot. Great spot for Lockheed, guys. I mean, they've kind of historically have always been between 40 and 50%. So you got to love it. Now, they've been increasing dividends, though, for 22 years as we slide into the dividend growth rate. Mm-hmm. Now, they've been doing it at an average rate of 7.21%. So I don't care who you are. If your income is growing by over 7%, I know a lot of employees and coworkers out there, if you're getting between 1 and 3%, 7% income growth from Lockheed Martin.
Yeah, that's fantastic. And their yield is almost at 3% now, and their yield is almost back at 3%. It's 2.96%. So, so close to
Come
going
on.
for them, Martin. Yeah.
A couple more dollars down, it'll get there.
Yeah. So obviously, they're a large 105 billion market cap company. They're down 8% year to date. Moving over to the balance sheet, though, we're going to throw a few metrics in here. Current ratios at 1.13x, quick ratios at 0.95x. So both are one's above, one's right below, right in the money spot, right where we want to see it. The interesting thing I think about Lockheed Martin, Lanny, would give me the most reservation is the debt. Their debt to equity ratio is 3.3. So they're not afraid to lever up that balance sheet, which is always something to keep an eye on, especially if you're seeing revenues potentially come down.
Yeah. But still, the balance sheet overall, I mean, that debt to equity, you don't like to see it right there. You don't want to see it over 3x. Typically, 2.5x is okay. But 3x, you kind of, in a high interest rate environment, it makes you, it doesn't make you as nimble. It doesn't make you as quick. But, again, they're a company. They should know what they're doing once they borrow this much and to manage the return on that borrowing.
That's right. So we'll put the chart up here for Lockheed, the 16.4 price earnings ratio, nearly 50% perfect payout ratio, 22 years of increasing dividends with a 7% 5-year growth rate and a nearly 3% dividend yield. For Lockheed Martin, Lanny, it's not quite in my buy zone at $446. It's still a little expensive. I'd love to see them in that. What'd you say? I was just
you go ahead.
No. I want to hear what your guess was.
Yeah, 430, 435.
I was actually going to say 420. So I was going to go a little bit lower. So it's not that far from there. That's another 5 to 7% drop for Lockheed Martin, but anything's on the table. So
if it's a 50% drop, I think.
Yeah, those are all my favorite. I would love Lockheed. I can't wait for the one person to put the comment of, I would love Lockheed Martin if it's at $250 a share. Then I'd buy it. Some people, it always cracks up.
I remember when Pepsi was, maybe Pepsi will get there, but I remember when they were at like 150. Like, I'd buy them when they're at like 60 or 70. That's when I'll buy them. And I was like, same.
Yeah. How many 12 packs are you getting to buy them at 60?
Right. That's Lockheed Martin, guys. That is Lockheed. Bert, again, has another stock here, a stock that's been challenged at the management executive level. A couple accounting scandals, a couple other accounting mishaps. Some bad reporting had happened during well, plenty of prior years, and then more just kept getting uncovered during 2024. And then obviously you've also got the RFK effect that's happening to this stock as well. The stock again is down 8% this year, and they've been hovering around that 44 to 48 range for quite a bit of 2025 already.
If you haven't guessed it, we're talking Archer Daniels Midland, ticker symbol ADM. And you're absolutely right, Lanny. That's what they're getting crushed right now from the scandals and facing a bunch of political pieces too. And I think I'm not an expert on all these items, but they seem to, in addition to going through the RFK, like cleaning up some of the food, they're going to be impacted negatively by tariffs, whether for other companies that buy soybeans, produce soybeans, ethanol, all that stuff's going to in Brazil for potential tariffs. All of these things are weighing Archer Daniels Midland down right now, and that stock is now down 8% year to date. 11.74% over the last 52 weeks. They're still up over the last 5 years. But to your point, Lanny, they're in that mid 40s range, which is always a rare spot to buy ADM. I don't even think they were this low when they had that accounting scandal a year ago. I think they're lower than the low below that accounting scandal.
They are. They are. I think the low is probably like 49 or $50 a share. So at one point you could have got, I think, ADM at what, 44 maybe a couple weeks ago. So
Yeah.
this isn't quite the bottom, but they did announce, obviously earnings. They're it's going to be tough. Again, as Bert mentioned, a tough 2025 in the beginning, with tariffs as well happening. A lot that's being put in place, I think, over the next couple of weeks to start in March. So we'll have to really see what the impact's going to be with Archer Daniels. So this is one where it's definitely a higher risk play, not a high risk play, but a higher risk play here on the dividend portfolio, simply because there's a lot of headwinds coming out at ADM, but they did still announce and keep that streak alive with a 2% recent dividend increase.
That's right. So let's see how the rest of their metrics stack up. Their price is at 46.59. EPS is 426. That's a price earnings ratio of 10.94x, which is below that 5-year average of 11.89x, which, hey, they're well below their average P ratio, way below the S&P 500, both of which are showing signs of undervaluation for ADM. That payout ratio, Lanny, you want to talk about it?
Absolutely, guys. $2.04 per share, 51 cents a share per quarter that they pay you guys. Nice little couple quarters and a penny coming your way.
Well,
a penny might be going away,
yeah,
but let's.
I was just about to make that joke.
Very similar payout ratio to Lockheed Martin, again, right at 48%. So still relatively safe right now with ADM. Again, that's part of the reason why you buy ADM stock, is because when they're firing on all cylinders, they are firing on all cylinders. This stock is an appreciating asset with a decent balance sheet, low long-term debt, as Bert will get into. So with a 48% balance sheet, you have to feel pretty good given the balance sheet levels.
Yeah, and we already talked about that dividend increase. It's already a long-term dividend grower. Their 5-year growth rate 7.35%, which so that 2% this year was below their average, which is actually probably what you want to see. When a company is struggling, that's not the time to push the dividend increase far. That's not the time to be like, we're going to break the record. We're going to do 20% banger. No, you dial it back.
Insert UPS.
Yeah, you keep things conservative, weather the storm, and then increase it. With that, though, Lanny, with their drop, their yield is actually now 4.38%. So ADM is well above that 4% eye-opening dividend.
Yeah, man, if you would have been able to, if we quickly shock us real quick at $40 a share, man, you could have got them at 4.6% yield, but 4.38%, hard to complain about that. Well above your SCHD, VIG, VOO, S&P 500. So
yeah. So moving to the balance sheet here, that current ratio is 1.39. Quick ratio is 0.81. So obviously like to see quick closer to 1, but they have some inventory. It is what it is. They produce products. Stuff's going to happen. It's not terrible. That debt to equity is only 0.52x, which is much, much more manageable than Lockheed Martin, who's at 3.38. So it's nice to see ADM's not over levered and they have a modest payout ratio when they're expecting a tough 2025.
ADM flexing the muscle there, guys. All right, let's get into the third stock here, the biggest stock on this freaking list here. The stock that Bert's been buying hand over fist. Bert, did you buy a share today in the 160s?
You're darn right I did. We're talking Alphabet, ticker symbol GOOGL. I set a goal of buying at least $5,000 invested into Google
Oh,
with this
5 grand,
drop.
baby.
Yep. Yeah, we'll give an update. We're going to save that update for a little bit later to see what my new position is in Google. But yes, I am loving them, and I'm loving them as they continue to fall. They are now down 10.99% year to date. They're only up 21% over the last 52 weeks. Just a month ago, Andy, they were above 200. They're closer to 210. Now they're traded at that 168.50. Google is just getting hammered right now. EU's causing some noise for them with their products. They're coming down on some antitrust laws, search practices related to them favoring Google Flights, favoring all their other products. And my big response is, you don't say. What would you do in that situation? Would you just hand somebody over to your competitor? Um, yeah, that's anyway. Obviously, though, what you like about Google is everything else that's going on. I saw somewhere that YouTube podcast now has I forgot what the milestone, whatever it
Yeah,
was, they crossed a milestone.
yeah.
And I guess my question was, who uses YouTube for podcasts? I'm curious. Throw it down there in a comment. Are you listening to this on a podcast right now? We'll hit the button on that podcast thing. We'd be curious. Let us know down there. YouTube's on fire. YouTube is growing. They're trying to grow people that are.
Our subscribers, guys, hit that subscribe button. Do it. Takes 3 seconds.
That's right. And they've had some quotes about how is DeepSeek going to impact their AI. Google's not worried about it. We'll put the quote up here. They say that their models are better. They're more efficient than DeepSeek. So right now, Google's just going through some stuff. They're going through some tough times. They're like how Lanny and I have just been sick for nonstop. They can't snap out of this little funk they're in. Hopefully they will soon.
Down 11% this year, too. I mean, down
Yeah.
more than what Lockheed and ADM are.
It's crazy. So let's get into the metrics here, Lanny. You want to walk us through the price earnings ratio compared to the 5-year average?
Sure. So with Google, they are down to $168.50. $8.99 is the EPS projection. 18.74 is the PE ratio, which is below 26 and a half 5-year average PE. So that is quite a bit. I mean, you're talking 30% below that 5-year average.
Yeah, they're new to the dividend game, so they haven't had their first increase yet. But they pay 80 cents, so their payout ratio is 8.90%. Meta just announced a 5% dividend increase, Lanny, so they're new. So I would expect Google to do something along those lines. I'm expecting them to at least have some increase, something small to match what Meta's seeing.
I dig it. I dig it. Now, with the dividend yield, oh, baby, this company really pays you. It's a schema. Now, they pay you 0.47%. Obviously, that yield has picked up a few basis points with them being down 11%. Now, after the increase, it'll probably be around 50 basis points, but that will continue to climb and get better. But you also buy the stock because of the appreciation, the overall return, the cash flow monster, and the cash machine that Google is.
Yeah, that's absolutely right. So we're going to put the metrics up here. Again, there's no buying point for me right now where I'm waiting for Google to drop.
Buying.
I'm just buying them now. If Google keeps falling, I'm going to keep buying. I'm going to keep buying a share. I bought them at let's just say it's like 180,
80, yeah.
175, 172, 168. I will just keep buying Google as it keeps coming down. Not afraid to do this. And I'm happily enjoying it. So that's the third company here on this list of stocks that I own that I'm watching. Yeah, that's right. So everybody, we'll put the chart up here. LMT again, I said I'm buying around 420. ADM, I didn't really say a price, but it's really not that far. I might pick up a share. I might reevaluate over the weekend of is there a stock I want to fold into ADM with that 4% yield? That gives me a nice little buffer. It gives me a lot of room to play with companies to dump where I'm not giving up any. Yeah, Kraft. Yeah, you're right. Or if I sell some, yeah. Anyway, in Google, I'm buying now. So let me know
where you sell Google for ADM.
Yeah, pick up that yield, baby. That's what it's all about. All right, so let me know what you think of those three stocks: LMT, ADM, and Google. Let me log in Coinbase one more time, Lanny. Let's get that instant.
8.7.
Wow. All right. You've seen it. It started at 82. It dropped to 79, what, 79.2, 79.3 during this video, back up to 80, 87, whatever. It's the fun of it. Everybody, what stocks are you watching? If you were me, would you be buying Lockheed, Archer, Daniels, Midland, and Google? Throw it in that comment section below.
Yeah, let us know if you guys have been gobbling up Google stock. Love hearing the chatter about Google stock right now being one of the best, most undervalued stocks right now in 2025. Like the video, subscribe to this gosh darn channel, guys. And Bert, hit him with the last message here.
You're either with us or you're against us, Jack.
That was Bert the Herd and Landy from the Dividend Diplomats. Over and out.